Are you an AI optimist or are you an AI alarmist?
It's just phenomenal. And we're already in it. We're already starting it.
Let's talk about Elon Musk and President Trump and kind of what's going on in U.S. politics right now.
Musk fan or not, you just have to see how this mind works.
How do you make decisions and manage a company based on external factors that are completely out of your control?
Let's talk about U.S. interest rates. So in the United States, for Huntsman to kind of be running on all cylinders in the United States, we need a return to housing.
Peter Huntsman, welcome back to the podcast that bears your name. It's been a year.
Time flies, doesn't it?
It sure does. How you been?
Okay.
It's great to have you back. And as I said, the podcast has your name on it. We've had a lot of guests since you last appeared, but as the name bearer of the podcast, you are our favorite guest. So we're happy to have you.
Yeah, I'd rather it be named after the company, not me.
So big week this week at Huntsman. Had our earnings call, Q4 for 2024. And I was looking through some of the analyst reports after the earnings call, and there was a lot of optimism in a lot of the reports. Tell us about that. You seem to be optimistic after a hard year in 24.
Well, 24 was indeed a very hard year. And as we look out into 25, we'll probably have time to talk about some of the more fundamentals as to what do we need to do to really see a turnaround. 23 was not a great year. In 22, we saw we started to see the fall off.
Yeah, so the end of 23.
If you're looking at macroeconomic trends with the company, with the industry, you've started to see a fall off in 22. Going into 23 in some of the divisions and applications. 23 is a tough year. 24 is a tough year. And so it's been almost 3 years now of just really tough news, right? And I don't think that it was our numbers per se of today as much as where we think we might be getting a little bit of momentum going forward in certain parts of the markets.
So one of the benefits of being in the industry as long as you have is that this is not your first industry downturn. And so what do you say to the folks out there that, maybe this is their first or second downturn about how do you approach your day job when, there's bad news out there in the industry and in the company on financial performance? What do you say to those folks that are trying to figure out how to navigate, a downturn, which you've seen, you've been a part of? It's not your first one.
Yeah, I get used to it because it's just the nature of our industry. And it may well probably get worse. The reason I say that is what are the things that most affect cyclicality in our industry? It's overcapacity and it's economic slowdown. Mm-hmm. Let's take the economic slowdown off the table for a second because there's so many variables that go into that. But when we talk about capacity, it used to be that you'd go out and build an MDI plant, and an MDI line would be 40, 50,000 metric tons. Today, there's 600,000 ton facilities being built. Our largest Chinese competitor, Wanhua, has a single site location that has more capacity than all of the plants in North America, all the MDI facilities in North America combined. Think about that. One site in Asia, that's the site of all of the facilities in North America combined. And so as you think about that, if they were to build another plant that size, it would probably take 2 or 3 years for the industry to absorb that much capacity. So with technology comes greater capacity. With greater capacity comes more volatility.
You mentioned Chinese overcapacity. There's a couple other big trends in the industry that I want to kind of pressure test with you. And A, are they right? And then how do you manage them? One is U.S. interest rates, right? Obviously, building and construction, commercial and residential, huge sector for us. Energy prices in the EU, you've talked a lot about that, which we'll get into more. And then China's economy, demand, right? And then you add overcapacity. There's these 3 or 4 macro trends that impact our industry, our company, that at the end of the day, you can't really control, right? No CEO can control the demand of the Chinese economy. That maybe the government can help that, but that's something that we kind of have to wait for. how do you make decisions and manage a company based on external factors that are completely out of your control?
One of the things that I'm always amazed of is how little people really study those external factors and what are the variables behind them. Think how often we spend in the day reading news. Most of the news we read is gossip, right? We get on websites, we get on YouTube, we watch videos, and we see this endless stream. Do we really understand? And if you understand what moves, no, you're right. Nobody can control them. But if you understand kind of where they're going, or at least can make an assumption as to where they're going.
The trend line.
The trend lines. You can start making assumptions into your business. Do we need to calibrate costs? Is this something we just need to wait for a year or so? Let's talk about U.S. interest rates. So a couple of years ago, 3 or 4 years ago, interest rates were around, and I'm talking about mortgage rates. Let's just focus on mortgage rates for a second. Mortgage rates are what you pay for a house, and it's also what you pay for rent. So people say, well, I don't have a mortgage, therefore I don't have to worry about houses. Well, rents are going to go up too, because usually the person who owns the apartment, your landlord, has gone out and they've taken out a loan. And those loans are going up, your rent's going up. So a rising tide will lift the cost of living. And that's a very insidious way of causing people to become poorer. And so we see interest rates rise largely through monetary policy. If we have too much money into a system, the value of that money will drop. If I come into this company and I've got 10 people on a floor and I'm trying to sell candy bars and I've got 1,000 candy bars I've got to sell,
price
and all 10 of them want it, I'm going to have to lower that price really, really low to move
basic supply and demand.
Basic
in
laws
this case,
of supply and demand.
monetary
In
policy.
this case, we put too much money into a system. We can go back all the way to pre-COVID, and COVID had a lot to do with it and so forth. So we get interest rates start to go up. Interest rates used to be around 3%. They're now close to about 7.2%. That means that the cost of owning a home has doubled in the last couple of years. Yeah. Now, is that going to change in the next couple of months? No, it's not. Is it going to go back to 3% within the next year or two? I really struggle to see any scenario short of one of the best things that could probably happen is a massive economic recession. I hope this doesn't happen, but a recession would cause interest rates to come down very quickly, right? So there are some mechanisms, but we typically don't want those to happen. Interest rates have to move very slowly. Now, forgive me because I'm probably getting a little bit into the weeds here. When I got my first mortgage, $50,000 back in 1983, the interest rates that I had at that point were 13%. I remember a lot of my friends were saying that's a great interest rate because a lot of people 2 or 3 years before that were paying 18, 19%. So we're at 7% today. I want to say this particularly to the younger people that are listening to this.
Still low.
Yeah. So as we think about this, so I said, okay, well, so I said 7.2%. So as we think about that 7%, that's about where it's been over the course of the last 55 years. So what does that mean for us if we're building homes? That means that the cost of your home is now going to be almost doubling. Society has to get used. I'm going to be paying the same amount for my home, but I'm going to be getting half the home.
So we're kind of going back to the old normal.
Going back to the old normal. When I was driving a truck and I had my first mortgage, it was just a rule of thumb. You bought a home for 3 times your salary. I don't think anybody's heard that phraseology.
No, I've never heard that phrase.
Years. I remember my dad, I remember the bankers, I remember my boss tell me, you never pay more than 3 times your salary for a home because interest rates were such that and that was taking up a big chunk of your income. So as you look at some of these things, so in the United States, for Huntsman to kind of be running on all cylinders in the United States, we need a return to housing. That doesn't necessarily mean we need to have houses or mortgage rates go back down to 3%. That may be a once every 50 years anomaly.
Yeah.
I don't think that's a normal. I think that's actually too cheap. I won't get into why, but you're probably gonna have to see a housing market that recalibrates itself. And that'll return. I think that'll return over the course of the next year or two.
What are your thoughts on Chinese demand? Just that economy picking up? I know it's been a good spot for Huntsman, but there's still it's not historical precedent.
We oftentimes will look at the Chinese economy and we'll say, well, the Chinese are dumping too much material overseas. Think of how long it takes to build a chemical plant, even in China. You're looking at probably 6 or 7 years. You want to build an automobile plant, you're probably looking at 5 years. You want to build a steel mill, you're probably looking at 10 years. So look at those plants that are coming on in the last year or so and go back 6 or 7 years. You're in a time before COVID. You're in a time when the Chinese economy is growing at probably somewhere between 5 and 7, 8%. Monetary policy was different. Interest rates were lower. Yeah. The U.S. was buying huge amounts of raw materials coming in from China. And Chinese start to build out this massive wave of capacity to meet what's expected to be this continuation of what for them has been a 30 years of continuous year-on-year growth. COVID comes along, a lack of confidence in the Chinese market. The export markets start to close because Europe slows down economically. The United States slows down economically. China can't export as readily as it has in the past. And so the Chinese are now stuck with all this new capacity that's being built around this assumption that the economy is going to continue to grow. This new capacity comes onto the market. Their economy starts to slow as well. I think the Chinese economy today, if you're seeing more than 1% growth in China today, I'd be surprised.
You think it's that low?
I think it's very, very low, single digits. In housing, I don't think there's been growth since COVID. I don't think there's been growth for 4 years in housing. Remember, late 1970s, China starts this economic boom. 1970s, 1980s, 1990s, 2000, 2010, up to 2020. It's 50 years. Yeah. This is the longest, largest, hundreds of millions of people go from rural living in China into owning a home. In many cases, owning more than one home. Yeah. Hundreds of millions of people over a 50-year period. It was phenomenally successful. You tap the brakes on that, yes, you're going to see what you see. Now, is it a disaster? Is it a depression? No, it's not. But until we see some sort of growth return in China, particularly in their housing markets and so forth, I think China's going to continue to do well for this company, but for it to take off, kind of be where it was pre-COVID, you need to have a little bit more economic activity.
So would you describe U.S. and China as going through somewhat of a deleverage right now?
Yes. Yeah, absolutely.
Low interest rates, a lot of debt. This is a transition.
You would look, our
theirs I think is worse than in North America's, but both places are higher rates, a lot of debt.
Theirs might be worse in North America, but they have different levers that they can be pulling that is probably easier to do in China, where you have more of a controlled economy than you do in the United States. Sure. So there's pluses and minuses on both of those sort of areas, but the United States is certainly going through an era where we've got too much debt. I mean, just think of this one statistic. Today, we spend more money on paying the interest for the debt of our federal government than we do for the United States Department of Defense.
We're gonna get into all that because that's top of the news these days. But on the third leg of that stool, we did North America, China. You have talked a lot about Europe in the last 2 or 3 years. I would argue you were prescient on the deindustrialization of Europe, which now seems to be in the paper every day. You were speaking about this 3, 2, 1 year ago, publicly, privately. Do you see any hope there in Europe, particularly around energy prices, which is structural and is the lifeblood of energy-intensive manufacturing?
Look, Kevin, I truly consider myself an optimistic person, and Europe has given us innovation galore. I mean, you go back over the last 100, 150 years, Europe gave us nitrogenous fertilizer that feeds half the world today. Europe, a lot of the nuclear ideas and physicists came out of Europe. The chemical industry came out of Europe. The pharmaceutical industry came out of it. Most of them along the Rhine River Valley, starting in Basel, going up into the Netherlands. This is where the Bessemer steel, this is where, I mean, industry was born
and this
in
stuff
Europe.
went all around the world.
Went all around the world.
Made people's lives
Europe
better.
Not only exported technologies and know-how and education and culture and music, they exported wealth. They exported opportunity. They exported, in many cases, democracy. The United States of America is given birth by European ideas around a Republican form of government. And so I'm very optimistic when I think about Europe. We've invested as a family and as a company going all the way back, starting 1977, long before Huntsman Corporation was ever formed. My father had joint ventures, and the very first one we had was in Dusseldorf. My brother John went and worked there when he was 16, 17 years old. That would have been almost 50 years ago. So this idea that somehow I'm anti or down on Europe. Now, I am down on their policies around energy and around regulation. And those two things, I believe, are ripping the European fabric apart. And the lack of ability to compete from hydrocarbon from a raw material point of view. I had an opportunity to meet with a large gathering of some 30 CEOs with Ursula von der Leyen a year ago in Antwerp. I will be meeting with her exactly this Wednesday in Antwerp once again. I'll have the opportunity to express my views. A year ago, I told her that we needed action and we needed to move, and we needed to move very quickly. Whatever it is you're going to do, whatever your plan is, she had not told us what her plan was. Her plan was coming out that very next day. I'm going to go back and I'm going to tell her that they're not. I said you need to move. She said she was going to move. Nothing's happened.
I happened to be in the room, and I remember you pressed for urgency along with other CEOs, and it's worse today than it was 12 months ago.
Kevin, just over a decade ago, we produced 10 times the tonnage in Europe than we do today. Now think about that. We have seen a 90% decline in Huntsman's production rates in Europe. Now, some of that is by design.
Yeah. Asset sales.
We've sold off assets, TiO2 and so forth. But a lot of those assets, the vast majority of those assets, we sold them off because we did not see a supportive government and supportive energy policy, and we could see the writing on the wall. And had we not done that, had we still had today the TiO2 operations, aromatics, olefins, and some of these heavy chemicals, we sold them off to companies that have since closed or gone through bankruptcy. And that's a terrible indictment on the economic policy, not of Huntsman, but the broader economic policy of Europe. And yes, I am very vested with Europe. It is one of our three engines that we have in this company of growth, of opportunity, of people. And yes, I'll get very passionate when it comes to, we want to see a turnaround. We want to see an improvement. They're capable of doing better, and they have to do better. They're on a road to destruction.
If there were one or two things that you had the opportunity to tell her and other policymakers in Europe to fix this specific problem regarding energy-intensive manufacturing, what would they be?
You can get rid of hydrocarbons. Number one, you can get rid of hydrocarbons as soon as you find an alternative. And I'm not just talking about hydrocarbons that go into energy. I'm talking about hydrocarbons as a raw material. Everything around this room, from this microphone, the clothing I'm wearing.
Yeah. Feedstocks.
It's a feedstock for material. So if you can find a way to get this mug right here, this microphone technology wiring, if you can find a way to get that from wind, it's impossible. The physics just don't work. Okay, so
right.
I'm ready to move from hydrocarbons. So you got to give me an alternative. The problem with Europe's having right now is they want to ban hydrocarbons, all hydrocarbons, with no alternative. Intermittent wind and intermittent solar doesn't cut it. We're seeing that in the UK. We're seeing that in Germany, where they have the highest energy prices today in the world.
And even if you could power an energy-intensive industry on electricity from wind and solar or nuclear, you still need cheap feedstocks to make things.
You've still got these.
So you can get hydrocarbons from North America, but if it's not cost effective, you can't make a profit. And ultimately, you're going to go out of business.
Number one thing, an energy policy that makes sense. Number two, Europe has got to free up their entrepreneurial class. They've got to look at a tax system and an incentive system. Europe is losing too many of its brilliant computer scientists, its engineers. Where are they going? They're coming here. They're coming to the United States. We sit in the United States and we complain about a high tax structure. We complain about too much bureaucracy.
It's nothing compared
They
to
come
Europe.
here and they think that they're being liberated.
Yeah.
And number three, you need to get this idea that you're going to have regulation at the EU level. You have regulation at the state level, the federal, the country level. You're then going to have it at the state level, the individual, and then you're going to have it at the community level.
Then you're going
to have it at the city level.
Layers and layers.
And just to get anything approved, it just takes years and years. And that's just all added costs. It costs money to make a decision. It costs money to move forward. It costs money to buy your energy. And all of this just makes it an uncompetitive environment. It can all be fixed. It really can.
So we talked about the three pieces of the stool, the three legs of the stool. There's a lot of uncertainty. One could argue probably more uncertainty globally than maybe you've seen in the last 20 years. That also presents opportunity. So when you look out there as the CEO of Huntsman, but also just somebody that understands the industry, what should people expect in the next 1, 2, 3, 5 years on M&A, organic growth, innovation? I mean, there's a lot of instability, and there are people that will seize the day on instability and uncertainty.
Well, one of our biggest challenges that we have today, and I hate to emphasize a negative within the company, but let's be honest. One of the issues we have today is our earnings capability, right? We've got a very strong balance sheet, and the less money you earn, do you have enough money where you can pay your dividend? People say, well, cut the dividend. Well, the dividend is the money you're giving back to shareholders for having faith in your company.
Yeah. It's an incentive to invest.
It's an incentive to invest. It's an incentive to invest behind the jobs of every single person that work in this company, to grow, to prosper, to invest in our future. That's what our shareholder base gives us. Okay? So if we've got to be able to generate positive cash flow to be able to keep the machine, to keep the engine going. And over the last 3 years, largely, we've got a multi-billion-dollar business in Europe. And aside from advanced materials, in almost 3 years, we haven't made any money in Europe. We haven't made any money. The other regions are putting money into Europe to keep it going. And a strategy of, well, let's just sit back and do nothing and wait for the times to get better is not that's a strategy for destruction, in my opinion. We've got to be out there making decisions. We've got to control our costs. We've got to be looking at market innovations. Look, there are opportunities in Europe. Look at advanced materials. Yeah. We're investing in aerospace. We're investing in lightweighting. We're investing in composite materials. We're investing in the electrical infrastructure and so forth. There are areas in polyurethanes around TPU and so forth. There's elastomers and some of the automotive applications. When I look at the amines expansion we have going in pet ferto. There's real opportunities that are out there, but from a macro, the bulk materials, the products that we make that go into housing, that go into construction, that go into large scale automotive applications and so forth, we're not making enough on those because the demand is not there and the pricing power isn't there. We're not making enough there to cover our costs. So we need to do that to have the opportunity. We have to earn the right to grow.
If you were going to simplify what you just said, would you kind of bucket those into the energy-intensive businesses like polyurethanes that just cost a ton of money, you can't make a margin on right now, versus the low energy-intensive businesses of AdMat, advanced materials, elastomers? I'm trying to simplify it. Help people think about it, how you think about it.
A lot of that's going to depend where you are, right? In the United States, where you have very competitive natural gas, you want energy-intensive businesses here because you're going to have an advantage. China, energy intensity comes from their large consumption of coal. China's building more coal-burning power plants right now than they've ever built. They consume more coal than the rest of the world combined. Think about that. And so you look at the low cost of energy in China. That's due in very large part because of their competitiveness in coal. We look at our raw materials and energy competitiveness in North America. The third area is going to see that is the Middle East. And those are going to be your three regions of basic building blocks. Europe is frankly missing out on it. Doesn't have to. They've got plenty of hydrocarbons. You got plenty of coal. You got plenty of technologists.
They can frack.
You could frack. You can frack in Germany. You can just
Netherlands, UK.
2 weeks ago, UK found a gas field that will supply with present technology. It can be founded, be exploited, and can supply the natural gas needs of the entirety of the UK for the next decade plus. Think of the wealth that would create. You're not shipping your money. You're not shipping your power bills off to Norway, the United States, Qatar, Russia, or someplace else. You've got these great opportunities, but you've got a policy that is too fearful to exploit them.
Yeah, and for our listeners, the UK Energy Minister, Ed Miliband, said what?
Ed Miliband said that in the UK, we would rather pay higher prices for our electricity than produce our own natural gas.
Yeah. So I have to kind of drive home
his own people to poverty.
I got to drive home this point because here you have an energy minister who presumably their job is to make their country an attractive place for manufacturing. And the UK's history in manufacturing is 150 years, industrial revolution.
Nobody comes close to UK.
You find natural gas reserves that could power energy-intensive manufacturing very cheaply.
In
you could make
low population areas. This is right in the...
It's like the Permian Basin in Texas. And the energy minister says, we're going to keep that in the ground. And so when I read that, I always like to think that if you're the CEO of a company that needs molecules, cheap energy, and cheap electricity, and you hear a government minister saying, no, we're going to keep those resources in the ground and we're not going to convert them into wealth, prosperity, products, jobs. That's what I think people often fail to understand in this conversation is that those are the feedstocks, those are the baseline that you need to have energy-intensive manufacturing, and governments are saying, no, we'd rather import those from North America or Norway. And that, I think, gets lost in the conversation, that you need these things to function as a society, but for us or other chemical companies, you're never going to make money without them.
Well, Kevin, again, I don't want to be pessimistic here, but this is where I see the rank hypocrisy of all of this and the whole climate argument is what's happening in Europe. It's not that people are shifting from coal or natural gas to wind and solar.
It's actually the opposite.
It's the opposite's happening. They're exporting these very industries to India, to China, to far dirtier CO2 emitting places, and then re-importing the finished goods in. They're depriving themselves the opportunity to tax, the opportunity to employ their people, the opportunity to take their own technologies and make these cleaner advancements and so forth. And basically they're taking their goods and services, their CO2s, if you will, and they're just exporting it.
Yeah.
Now, if you're a real environmentalist, what you'd be saying is we're going to do away with coal and we're going to replace it 100% with natural gas, and then we're going to start overnight to try to get rid of natural gas and try to go to nuclear, try to go something cleaner. You're going to transition. You're going to move this. But the transition right now is we want to stop doing this. We don't know where we're going to go. We don't know how to. And that's the frustrating part. Somebody like me, you invest in a petrochemical plant. Look, give me free power every Wednesday. Terrific. I operate from
wind.
Yeah, or for a week or something. That's great to hear. But what I'm seeing is I'm seeing free power on Wednesday, Monday, Tuesday, and Friday, and Saturday, and part day Sunday. I'm paying the highest prices in the world, and you can't compete in that sort of an environment. You have to have some reliability and continuity.
So, taking all that uncertainty, I'm gonna turn to another topic which I think creates uncertainty, but maybe opportunity, and I think a lot of people are interested in your views on. We have President Trump back in office, and he thinks tariff is the greatest word in the English language, and he's not afraid to use them as a mechanism in the system to extract concessions from competitors, and I think what a lot of people find offensive is from allies as well. What are your thoughts on just that, the use of tariffs, how they impact Huntsman? Are they good, bad? And, looking ahead 4 to 10 years, do you see us kind of going down this rabbit hole of race to the bottom on tariffs?
Well, I'm not going to get into the politics behind tariffs. If you're looking at this from a Trumpian point of view, the United States is the world's largest importer from virtually every region of the world.
Yeah, we consume.
Meaning we consume from virtually every region of the world far more than we export to any of those regions. So Trump can sit back and say, you owe me because I'm employing your people. I'm giving you revenue. It's all flowing to me. I'm buying all of your stuff, and you're not buying any of my stuff. When you look at that,
yeah, that's a trade deficit for listeners. That's what he's talking about.
It's very balanced in Europe. Stuff going in, stuff coming out, and when you look at China exports an enormous amount, and they import very little, and the U.S. does just the opposite. So it's interesting to note that when Trump was first in power in 2016 to 2020, he put a number of tariffs into place.
Yeah, people went crazy.
People go crazy. Biden comes in office. The polar opposite from virtually every single belief that Trump had, except for tariffs.
Right. Yeah. Bipartisan.
Right. There was not a single tariff I'm aware of that Biden took away. Right. So all these tariffs stayed for Trump.
Particularly on China.
Particularly on China. So you want to talk about, the only thing that both sides of the aisle agree on in the United States, it's around tariffs.
Yeah. And the kind of the longer term story on that is that Trump essentially hijacked Democrat policy on tariffs.
Yeah, it used to always be the Democrats were in favor of tariffs.
This was unions. They didn't like free trade agreements.
Right. This is Republicans that always wanted free trade.
So obviously we're one of the most integrated industries in the world with respect to supply chains. As you said, the tariffs are, I would say, less of an issue for Huntsman, at least right now, because who knows once that trade war, tariff war starts, where it goes. But if you're a big, huge chemical company, maybe the Huntsman of a decade ago, lots of commodity chemicals, very globally integrated, how do you approach that new world? I mean, how does it get into your mind in terms of where you're going to invest capital, where you're going to chart the next 10 years of a company, where you're going to pull investment out of or transition?
Yeah,
those are big questions that nobody has the answers.
It is, and it's very broad, because I just got through saying that the U.S., Europe, and China, for the most part, we're self-sufficient and reliant in all three of those areas. Great, so Huntsman's in good shape. Well, okay, but what are some of our largest customer segments? Automotive. Mm-hmm. Now, automotive, look what's happening in the automotive industry. So we may be safe, but our customers may be all over the place. Right. They're fragmented, and you've got manufacturers, you've got automobile producers in Europe, for example, and in the U.S. They're calling for tariffs right now, today. And you've got other automobile producers in Europe and in the U.S. that are threatening to sue the government for imposing tariffs because they want to be able to take their products overseas and sell them in foreign markets. And so this is now, wow, it doesn't affect Huntsman, but you know what? It affects our customers.
Sure does.
So we've got to understand what the tariff loads. But by and large, Kevin, you're going to want to be in an area of the world. You ask, where do you invest and what do you invest in? You want to be in an area of the world where your raw materials, that supply chain, your manufacturing, and your consumers are all going to be in a common market.
You talked about automotive. It's a big segment for Huntsman. They've tried in the last 5 to 10 years to transition to EVs. Companies have made huge capital investments to increase their EV production with the idea that if you can mass produce an EV, the price will come down. There's all sorts of government incentives. I think given the financial state of a lot of these businesses, they're now dialing a lot of that back, maybe got over their skis a little bit. What are your thoughts on that industry, kind of the decisions that they've made, but also the course correction that might happen in the next five years?
Well, I think it's going to be, you asked me, I've been in this industry for a long time, and I hate to admit,
as long as I've been alive.
Yeah, 40 years. But there's kind of one axiom that I've really tried to live by, and that is you never invest in a product that is mandated or subsidized by the government. Because as sure as the government is going to change, whether it's MTBE, whether it's gasoline mandates.
Yeah, you've learned that the hard way.
Yeah, we've learned that the hard way.
That comes with the wounds.
We've invested hundreds of millions of dollars over the years.
MTBE is a great one.
And we've been tossed to and fro as government policies and dictates and subsidies and tax policies change, right? And so when I think of something like EVs exist in China and in the United States largely because of government mandate and because of government policy. Ultimately, in a free market, like the United States and Europe, probably some degree even China, it's going to be dictated by the consumers. And where you've got an even playing field, as I don't even think you have an even playing field in the United States. You certainly don't in Europe, and you really don't in China, right?
You mean on the manufacturing of automobiles?
On the manufacturing, the subsidies. I mean, nowhere in the world can you go buy an ICE vehicle and get a $7,000 subsidy, 7,000 euro subsidy, or whatever the subsidy is in euro given the country and so forth, where the government is literally paying you money to go buy this car. The government is picking winners and losers. Now, there are all sorts of policy reasons as to why they may or may not do that. But you look at the largest fall off from 1 month to the next in EVs that happened in any country is when the subsidies stopped at the end of November this past year in Germany. And sales collapsed. Now, what happened to those companies? Invest all the billions of dollars, and that's the danger of all of these sort of things. So we can go on. We can do a whole podcast just on transportation, aerospace transportation, road transportation, autonomous driving vehicles. Huntsman's going to play a role in all those things, whether it's the technology, whether it's a battery, whether it's an ICE, whether it's an EV motor. We're in every one of those things.
That's a good segue to innovation and technology. We have 2 new innovations that I know people here are excited about: E-Grade, amines, and Elon. Talk about those 2 innovations and what excites you about them.
Well, one is the here and the now, and the other one is really somewhat of a gamble on the future. Elon's very exciting. It in very short. You take natural gas or methane, you put it into a reactor that's not much bigger than this room, quite a bit longer, but not much wider. And out the end of it, you get hydrogen, pure hydrogen, and you get almost something that looks like cotton candy, but much finer. And what it is just pure carbon forth. And you've got to have that weigh less than a pound for an entire sheet of this stuff. That's our material. Our material right now is orbiting planets other than planet Earth. It's being used right now. Now we need to lower the price of it so that we can sell it on a wider basis. So we're when I talk about Elon, we're in the process right now of designing a 5 kiloton, 5,000 ton reactor. We have a 30-ton reactor that's operating in San Antonio, and this is a scale up from a reactor that isn't much larger than this table. So making great product, but where do we see this going? It's going to be going to everything from strengthening concrete to replacing carbon fiber to the aerospace industry to EV batteries.
It's exciting.
It's exciting.
The possibilities are exciting.
But it probably won't be hitting the market in scale for probably another year or 2 in scale. Okay, and we're gradually going to be building up the markets and profitability. When I look at something like E-Grader, now we're talking about a grade of purity for an amine product that goes into the solvents, the applications and so forth of cleaning and processing and handling chips. Chips are getting smaller and smaller. You get a much bigger than an atomic size particle on a chip. It's going to slow it down. It's going to slow down your processing and so forth. And so the products that we use to clean, handle, process, manufacture those chips, the chemicals that are used for that, surprise, surprise.
Oh, you need chemicals for chips?
You need chemicals
for man,
chips
who
too.
knew?
And so we have to get our parts per billion, and probably looking at a future of parts per trillion of cleanliness. This stuff that just a few years ago was completely unheard of. And then we're now doing this in Conroe, Texas, and we're now being qualified with chip manufacturers. And this will be a very fast and growing end of our business over the coming
years. You talk about chips.
But that's here today.
Yeah,
that's
absolutely.
Being qualified today. It's being manufactured today. And once that qualification takes place, it'll take off.
You mentioned chips. You have talked and written about the energy demand of artificial intelligence, data centers, big tech companies, becoming more like refineries and oil and gas and chemical companies where they need massive amounts of energy, which for them is a big change. But also just this AI transition that we're going through as a society, and I don't think people really know what it means yet. Are you an AI optimist or are you an AI alarmist? Because there's 2 camps.
I'd be very much of the AI optimist. I'm a capitalist at heart, and
which makes you an optimist.
Well, which makes me an optimist. But I remember back in the late '90s when internet was going. Remember we used to. Well, you don't. You're too young.
No, I remember. I was in middle school when the internet came out, but I remember.
10 or 20 years
Parker
ago,
doesn't remember.
10 or 20 years ago, people used to talk about universal income. Governments were going to have so many people unemployed. This was huge. It was talking about states actually experimented with this stuff, that the internet was going to take over everybody's job, and we would need universal income. Tech companies would become so wealthy, so productive, and robots would be running everything. The government would just have to pay you to just live because there wasn't any opportunity.
So you're saying they're repeating the same talking points today?
Yeah, we're kind of, and now look, is there going to be displacement? Are they going to be jobs that are going to be made redundant because of this? Absolutely. But there's also going to be massive amounts. Cancer research.
Yes.
I look at the next phase of cancer research. It's just phenomenal. And we're already in it. We're already starting it. And we're just scratching the surface. I used to say somewhat haphazardly, my kids, my grandkids that are alive today, will see the end of cancer. They'll see a cure for cancer. My father always used to say that about my generation. I never really believed it when he used to say it. And I still don't. I mean, I think of my generation as kind of in the twilight of their careers right now. And, the twilight of our lives are probably in the next 15, 20 years. I look at my grandchildren, and I firmly believe that for virtually all aspects of cancer, between immunotherapy and early detection, and those things will be brought about largely because of AI. The ability to look at the Genome Project. 15 years ago, the Genome Project, if you just put it in terms of...
it's Bill Clinton, right?
Yeah,
mid-'90s? I remember being
late 90s, early 2000s.
Yeah.
It's only 20 years ago.
Right.
It cost $11.5 million to do the first really standardized genome. What we do today, this would be the equivalency of 15 years ago buying a high-end Porsche and buying that same vehicle today for about $30. So anybody's gone to 23andMe, anybody's done any, where you spit into a tube and you send it off and they tell you your ancestry and all this stuff. That's the Genome Project. And you're paying, what, 20, 30, 40, 50 bucks to have this done. And they'll give you everything from your medical history to your ancestry to all this other information. That was virtually impossible 10 years ago. And so you look at what the genome has done for cancer research and medical science. I think AI is going to blow that away. And what we're going to do is we're going to get down to the cellular structure where you can do a scan of a human body and you'll be able to analyze it at the cellular basis, and you'll be able to decipher the billions and billions of variables within our body just on a basic scan. Somebody out in rural, any place around the world can get a basic scan, and the scan won't cost a great deal of money. Well, it costs the amount of money is when you take that scan of an individual, right? And we're all unique in our profile, right? I could take every cell from you and put it here on the table. Your cells don't know that they exist. Your cells don't know that this is the miracle of life, right? Can you detect cancer before it gets to a malignant tumor? Can you detect it in ways before it even gets into your blood? And if you can find it that early and you can get right down to the genetic profile. Anyway, I'm getting in the weeds. I'm sorry.
No,
but this is what's going to happen not in the next 50 years. This is what's going to happen in the next 10 years. It's going to be phenomenal to see. And that's just AI, one aspect, cancer. Mental health, don't even get me going in that. I mean, where we are today is abhorrent. Where we can be going to in mental health, it's so exciting.
So you're optimistic about AI? I mean, you're excited.
Very much so. Oh, I think the world that my grandkids and my kids will be inheriting is just phenomenal. I mean, I look at when I was a kid in '69, I remember watching the moon landing and just thinking, we're all going to be. I mean, you go back and you look at Star Trek, you look at the shows. The idea was that certainly by the year 2000, we'd be colonizing Mars.
That's a great segue to Elon Musk.
We'd be doing all these wonderful things, right? And NASA today can't even get their astronauts out of space.
It's been outsourced.
But you look at what the private sector, again, 3 cheers for capitalism. Not only do we have Musk, but you've got Bezos and you've got Branson and you've got these other incredibly innovative and bright individuals.
All right, so you mentioned Mars. Here's a question. Do you think we should go to Mars?
No, I personally think it's a waste of money, but I'm sure there are a lot of people that were saying that about the moon, but once you get there, what do we do?
What are you going to do?
Yeah.
So
it'd be cool to send like a probe or something like that, I guess there.
Which we've done.
And yeah.
Okay, so let's talk about Elon Musk. and President Trump and kind of what's going on in U.S. politics right now. Because, obviously it's in the news. There's some good, there's some questions. I know we've been very involved as a company, as in our industry work in Washington. But what do you make of what has happened in the last month since President Trump came into office, but also just the fact that he was reelected in 2024, which, maybe 4 years ago, nobody could have ever predicted. I don't know. What's your take on it all?
I think people look at Trump somewhat backwards, I think, and somehow think that Trump is the movement. I look at it kind of backwards, where I think the movement is manifests itself in Trump. And I think people are so hungry for somebody that would go grab the government and shake it upside down by its ankles. Not everybody, but a lot of people. And Donald Trump is an incredible showman. And he has this ability to see that need. Imagine this individual. He's born in New York City, lives in a penthouse, grows up in a very wealthy family. I won't even get into his personal life and so forth. And he can fly his 757, a plane, one of the largest planes, commercial planes built. Guy flies himself into rural evangelical Christian America. And he's looked at, I don't want to say he's looked at as a Messiah, because he's not, but he's looked at as is the answer.
They love him.
I mean, how this guy, that's a great politician. Forget your views on his politics for a second. I mean,
he's incredible.
The Democrats,
he's remarkable.
Democrats would kill for somebody that could get out there and give that sort of.
They would hate me for saying it, but it's what Barack Obama did. 2007, he went into the middle of Iowa.
He was
an African American from inner city Chicago.
Did a great job.
Went into Iowa and won.
And who was the master of this in the last 30, 40 years? It's probably since FDR. It was Bill Clinton.
Of course.
I mean, Bill Clinton he was phenomenal. If the Democrats had a Bill Clinton today, Trump wouldn't be in office.
Yeah, that's going to be fun to watch in the next few years. So, Musk, richest man in the world, clearly an incredible creator, builder, certainly eccentric. What do you make of him doing this, both from is it a good thing? Would the outcomes be good? But also, you've been around people like him that are founder-led companies, your dad being probably the one you know the most, but also just other prominent people. Why do you think Elon Musk would want to do something like this? What is it? What do you think's going on in his brain to want to go hang out in an office building in Washington for, sleeping there on a cot?
I've never met Elon Musk. I'll say that right up front. And I think it was either you or Phil Lister who recommended Walter Isaacson's
Phil, because I also
Musk.
read it.
Yeah, I think it's Phil Lister. So I'll give a shout out to Phil. And
that's our CFO.
And I'm listening to this book right now. So I have a 15-minute drive every morning to the office, and kind of 15 minutes. So I get a half-hour day of book listening. And I found out I can get through a book like in 2 weeks.
Yeah, quick public service announcement. That's people always want to know what the CEO reads. There's one of your answers. 15 minutes each way to work, a book.
Unfortunately, I hate saying this. I listen to books more than I read. I love reading, and I keep
sure.
a library.
No, but it's
of
time.
hundreds
You can
of books
use
in
the
my
time
home.
effectively.
But it's an amazing. For me, I used to just listen to the same 70s rock and roll, and there's nothing wrong with listening to Led Zeppelin full blast coming in every morning. But I
we got to get to the new Led Zeppelin documentary. But that's
but anyways, I'm listening to the Trump book right now.
Musk.
I've got
Musk.
the Musk book. I can't imagine reading a Trump book this long, but it's
the art of the deal.
It's a phenomenal read. I highly recommend it.
It's tremendous.
You don't need to be a Musk fan or not. You just have to see how this mind works. I mean, this is a guy that started with PayPal and goes into building, and every one of these companies he builds, for the first decade they were around. They were a financial disaster.
Yes.
Banks, creditors, shareholders.
Yeah, he got kicked off the board of PayPal.
Everybody.
There was a overthrow by the board.
Everybody's trying to it is, and Walter Isaacson, who writes this book, is a phenomenal
and spent 3 years with
writer. Yeah, and I'm at the point of the book now. I'm near the end of it, and he keeps talking about I was in the author. I was in the meeting. This is what he said while I was there. And so you see this. Anyway, he brings up this point that kind of it so much reminded me of my father, and that is whenever times were good, he creates chaos, and he thrives when times are at their worst. Now, most people when times are good, they have a tendency to sit back, enjoy themselves, maybe take some vacation time. And it just reminded me of my father. And I hate to say it, maybe I even inherited some of those genes myself, according to some. When Dad, and it's not that you're creating a problem for the sake of creating a problem. Dad loved a challenge. And when times were good, it was always, what could be going wrong? Where do we capitalize? Where do we attack? How do we keep things moving? I think most people, when times are good, they sit back. I'm going to put a little bit in the bank. I'm going to relax for a minute. And you see this with Trump, with Musk. Dyslexia keeps coming through. Musk comes out, and he keeps, whenever something starts going well, he jumps over to almost creates a problem with the rockets. We got to design the engine with 900 fewer components. We've got to make this out of stainless steel.
There's that picture that's gone viral of the Apollo engine. And
the Apollo engine, his engine. And we got to make this out of stainless steel. And the fact that everybody says you can't do it just drives him.
He gets
and then he solves that problem. Now he jumps over to the Neuralink, and it's just
in the Boring Company.
It's the
making
Boring
tunnels.
Company, yeah, because he gets sitting in traffic one day, and so he obviously has a very unique mind that works really unlike most other minds, I'd certainly say. But you look at these tendencies. So, looking at somebody like him, I don't think he's driven by money. Obviously, he'd like to have. This is a guy that sold off all of his homes years ago. He lives in a ranch rambler that I probably worth $100,000 down on Boca Chica down by Brownsville, where they're launching these rockets, and I think that he's driven by change, not even necessarily good change, but just change. And if there's one thing I believe, whether it's Democrats or Republicans, and I wish the Democrats would get behind this one issue, our government needs greater transparency. We need to know where the money's going, and we need greater accountability. We need transparency and we need accountability. Republicans do, Democrats do, everybody
bipartisan.
does. And if the SEC, Securities and Exchange Commission, or the EU does the same thing, which I compliment, I think this is great. You can get into our public filings. You can virtually see how many miles I drive on a company car. Okay? Why don't we do that with the government? Why can't we have just a fraction of that sort of transparency with the hundreds of billions of dollars that we take out of your pocket
and my
Democrat
grandkids' pocket?
Yeah, because it's not coming out of my pocket anymore.
Grandkids.
It's now we're in so much debt in this country. We're spending literally my grandkids' money today.
I have to say, I've been in Washington for 20 years, and I've said this to you privately. I don't know why nobody's ever gone and said, "Show me the accounts."
Oh, they have.
No, I don't know if they have.
No, go back in the Clinton.
I don't know.
Al Gore?
They appropriate money. It goes from the Congress to the executive branch. I'm talking minute accounting of money in an account to a recipient. That's the first person that's ever asked for it.
I remember back in the Clinton days, he and Al Gore.
Yeah, reinventing government.
Yeah, yes. Reinventing government. And Jimmy Carter talked about accountability in government. Clinton talked. This actually were more Democrats looking at this
These
than
are
there were
bipartisan
Republicans.
things.
This is a bipartisan issue, and this is why I wish that that's what bothers me so much about Trump. Is it's like you got so many people in Washington that even if he comes up with the right idea, give him credit. If he would people still work with this? Like you've got this.
That's our politics.
People's hatred supersedes the good of the public, which we used to call that virtue. Virtue was changed in the 1800s, is to be more of a religious term of a female that had virtue, that wasn't kept herself for a wedding or something like that. Virtue before that, back in the Greek, Roman, Latin era, virtue was the service you gave to the community, the service you gave for a greater cause. That's what virtue was. And it'd be great if we could get back to those sort of attributes.
I want to tie the work that Musk and Trump are doing to something we talked about earlier, and that I think gets lost in the day-to-day media coverage, which is they are trying to cut spending on the discretionary side, because there's mandatory spending, which requires an act of Congress. That's entitlements, Social Security, Medicare, Medicaid, the big drivers of government spending. But there is trillions of dollars in discretionary spending. And the theory that they have publicly stated is that they want to reduce discretionary spending so they can lower rates, so that rates will come down on longer-term treasuries. We talked earlier about rates being probably back to the old normal of kind of 70s, 80s, 90s. Do you buy that? Because I know, and anybody that works at Huntsman that's ever been to one of your town halls knows that government spending, debt, is one of your pet passions. Every elected official that's ever come in here, you have, I would say, slammed them pretty hard on government spending. And I love watching that because it's bipartisan. They've all done it. The system is broken in that respect. It's on cruise control. Do you think that they could make an impact on the discretionary side that would actually stabilize the deficit and give, an opening for rates to come down? Because that would certainly benefit us. It would benefit the whole economy if that happened.
No.
You don't?
No, I don't.
So you don't, because they're only looking at discretionary?
Yeah.
Or you don't think it's enough?
So anybody that's watching this podcast, take 10 minutes, educate yourself on this. If you don't already know this.
Go to the Peterson Foundation.
Yeah, go to the
Peterson Institute. Peter Peterson.
Yes, Peterson Institute.
They get the best data.
Yeah, you've got so think of this pie, and it used to be
Pull up a pie.
It used to be that our government spending on discretionary stuff was half of it was kind of defense, and half of it was kind of the Department of fill in the space, Interior, Department of Transportation, Department of Energy, Department of Education.
Yeah, now it's interest.
And so that was the discretionary pie. And then around that, you kind of had what we thought of as non-discretionary. Social Security, Medicaid, Medicare, welfare, a lot of the tax payments and so forth. Mm-hmm. Europe's not too dissimilar to this, by the way, when you start looking at these debt pies. And so what we're saying is we're going to go attack the discretionary. But it's kind of like if you're going bankrupt in your home and you say, okay, we're going to attack our budget. We're going to get a handle on it, but we're only going to limit it to the money that we spend on entertainment, our cable, our subscriptions, and so forth. But as far as our mortgage, our food, and everything, that's all off the table. But we're going to balance our budget on a very limited field. So for every dollar that the government takes in, it used to be that about 90 cents was discretionary. Now every dollar that the government takes in, it's down to about 20 to 25 cents. So you're attacking a target where you're ignoring darn near, when you take the interest on top of it, you're darn near ignoring nearly 80% of it, Kevin. So you can cut the entire
discretionary.
You can cut the entire Department of Defense, cut all military spending. The United States spends more money on its military than all the other countries in the world combined. Think about what I just said.
I get it.
You can cut that entire piece out, and you're still going to be running a deficit.
So you're not optimistic on this initiative?
On this initiative, no. You are going to have to go cut Social Security. People like me, I don't mean to sound like a narcissist here, but I've done pretty well financially in my life. I shouldn't get Social Security. I'm beyond an income bracket where I shouldn't get it. Now, I've paid huge amounts of money to it over the course of my career. We can't afford it. We simply can't afford it. And the money that I put into the system was never invested. It's not out there sitting in stocks waiting for me to retire. The money that I paid into Social Security was paid out to people who retired as I paid it in. There's never anything about this savings. There's no way Social Security in its present form goes on for another 30, 40 years. There's no way.
Well, there's a way. It's just going to require raising the
require
retirement age.
And so the first politician who comes out and says, I think Peter Huntsman ought not to be getting a Social Security check, the other side is going to be saying, you're trying to steal his hard-earned money and save. No, there's no savings. It's a Ponzi scheme. And so when you look at this whole system needs to start from the ground up. It's rotted, it's poorly managed, and it needs to be blown up.
Okay, but you said earlier transparency is a good thing.
Yeah.
So do you think this exercise will lead to more transparency?
Oh, I hope it does. I mean, I hope it just relieves the skepticism on both Republicans and Democratic sides, saying that we need to understand the numbers and we need to be able to have accountability.
I agree. I think if there's, and again, who knows where this will go, but it could lead to more transparency and more accountability on members of Congress. Because at the end of the day, whether it's discretionary, mandatory, it's those 535 elected officials that are going to have to decide where we do spending.
Here's an idea. Have the members of Congress do their job.
I agree. Elon, you know what? I couldn't agree with you more. And having spent 20 years there, I can tell you that Elon Musk shouldn't have to do this.
No, this is nonsense.
There are government oversight committees.
It's
There's
ridiculous.
a government accounting office. There are inspectors general. There are mechanisms in our government and in our system that should control these costs. The debt limit is another one. That's just been commoditized, right? And now it's something that everybody fights about every 90 days. There are mechanisms in the system, but they haven't worked. And I'm not saying this is going to work. I don't know. But it is certainly a curveball that is getting people paying attention and hopefully increases transparency.
I hope it gets both sides. And one thing that I was very encouraged by a couple of weeks ago, when Elon Musk said we're going to look at the Department of Defense,
yes,
which I think needs to be looked at, and who was one of the first people who came out and said, I'll join you in that investigation?
Who was AOC?
Bernie Sanders.
That's right. It was
Bernie
Bernie
Sanders.
Yes.
Wouldn't that be great if
it doesn't get enough attention?
Yeah, wouldn't it be great if you could see the left and Bernie Sanders and somebody from the Trump administration come together and try to have some fiscal sanity?
Yeah, I am hopeful that Elon can create that bipartisan pressure on spending. We talked about government, and obviously government is a very big institution in our lives. There's been a lot of, in the last decade plus, I would argue it's because of social media, but increasing distrust in institutions. And you have been the leader of an institution for 20 years. You've been in our institution for 4 decades. You are part of other institutions, the Huntsman Cancer Institute, the Huntsman Foundation. Can you talk about both that lack of faith in institutions anymore, but how you maintain faith in an institution at a place like Huntsman or the Huntsman Cancer Institute? I think that it's and forgive me for just being for being overly personal here. I really think that it's around transparency. When my wife and I decide that we're going to make a contribution to a charity, the very first thing I do is I get on the website and I look up the charity and I look at their financials. I see how they're spending their money. How much of it goes into overhead? How much of it doesn't? How much of it actually goes in? If I give money, I want to be able to say my donation is going to make a difference, right? It's not just going to some big stock account. It's not going to an endowment. If it's going to an endowment, all you're doing is you're managing the money. You know, I'd rather manage my money than have you manage my money. Yeah. And I'll give it to you as you need it. So prove to me that you need it. It's about transparency. And I think that the greater transparency that we can have in our institutions, look at this whole Doge thing. It's all just a question of transparency, right? And I think if you have transparency and you have proper accountability, whether it's in government, whether it's in a corporation, whether it's in a church, whatever, have the transparency to be there, where the parishioners, the members, the citizens, the shareholders, whatever, they can have that transparency, and then hold people accountable. If you're going to be a person of trust, if you're going to be the CEO and you're going to sign off on the financial documents, that there's no trust in there, boy, and if my penalty is I go to jail time. Yeah, if I go to jail, I'm going to make sure that the CFO, I'm going to make sure that the officers, I'm going to make sure the people who create the numbers. So what it does is, and I'm not saying I'm passing the buck when I say that, I want to make sure I've got the right people that are presenting the numbers, that are generating the numbers. I want trust in the organization. I want transparency. I want somebody, regardless of where they are in the company, how long they've been with the company, if they see a problem, if they see fraud taking place, I want them to feel that they could call me and say, there's a problem here, and we're going to address it right now. We want honesty, integrity, responsibility, and respect. That comes through transparency. Yes. What are you doing to keep busy outside of work? I mean, I know you work out a lot. I'm spending quite a bit of time with the cancer research, mostly on weekends, and that's we're trying to build the first large scale
So the next phase we were doing, and we started this about 4 years ago. You have to raise some money in order to build a new cancer campus, which is what we're doing. We're in the process right now trying to raise $400 million to build this new cancer campus. We had this idea of Mary Beckerle, who's on our board of directors. She's also the CEO of the Huntsman Cancer Institute. Had this idea that we could be doing more with cancer research around computers. And so we thought about having this computational research. This was some years ago. Well, it was a $100 million project then. And then AI, the last couple of years, AI's just exploded.
Drive up the price of
and
everything.
we were in exactly the right place at the right time. And I think if we're successful in raising the funds that we're going to raise, we will be the first AI-driven computational cancer research facility that's built around that. Not a facility that exists already that's trying to put AI in, but we're building up from the ground up. So think about what a cancer lab would look like. If you go in the Huntsman Cancer Institute today, you'll find over 1 mile long of test tubes and beakers and petri dishes and samples and of all the fish and all the stuff that you're doing samples on. Think of an AI-driven lab where there's not a single bench. It's all done through computers.
It's incredible.
It is.
It's what we talked about before.
This is what we're trying to get our head around. And so we're trying to get, how do you even start recruiting? That means that the cancer doctors in the future, think of this, might be computer scientists. Yeah. When I read that scan I talked about earlier, and I'm driving an AI-driven analysis of the scan, that may not be a doctor that's doing that. That's going to be a computer scientist that's probably looking at the analysis. And then I go to the doctor, and the doctor then is going to treat that. But today, you've got to have a doctor, a radiologist, or you've got to have somebody with a medical background. You may be looking at the future where much of the medicine is transferred over to AI, is transferred over to doctors, to computer technicians and so forth. A completely new field that's going to require different hiring, different skill sets, So that to me is just immensely exciting stuff.
Tell people about the vineyard expansion, because I don't think some of our Huntsman employees and people that know the family, I don't think that they might not know what's going on.
So we have the Cancer Institute, the University of Utah, and this vineyard expansion. It's vineyard not because it's built over a bunch of
grapes,
of vines. It's actually when the Mormon.
So you didn't buy a winery?
When the Mormon pioneers came to Utah, they actually wanted to make wine to sell to people that were coming in and out, and so they actually built vineyards in an area, and they called it Vineyard Utah.
Mormons selling wine. That's a new one for me.
This will shock you, but they didn't make very good wine, and so it ended up tearing up the vines, and they ended up building a very large steel mill there in the Second World War. But that area now is being opened to what is called the Silicon Slopes. And outside of Silicon Valley, the area around San Jose, southern area of San Francisco, you have what's called the Silicon Slopes, which is a large area in the Intermountain area around south of Salt Lake City, where you have billions of dollars of value being created around the computer scientists and so forth. One of the things that you read about in Musk's book of the Neuralink, the chip that's supposed to go into your brain. Yeah. This is actually a chip that was developed in the 1990s at the University of Utah. The University of Utah is one of the very first computer science schools that got into aircraft simulation and so forth. But that DNA, if you will, that legacy continues in the Intermountain area. And so this Vineyard campus, that's where we're going to be putting this AI cancer-driven area. So we hope that I think that because of the size, the focus on it and everything, I think it can be, I'd love to see it. We'll be doing a groundbreaking there, hopefully in the next couple months.
Since you last came on, you had your 20th grandchild. Is that correct?
Yes.
You've had 8 kids. You now have 20 grandchildren. You're 60-something years too.
61.
What is it like to have 20 grandchildren? And, I'm kind of just life.
I'm just praying that you don't ask me their birth dates.
No, I'm not going to put you on. I wasn't going to ask you their names, never mind their birth dates.
But
you have 20 grandkids. Well, how does that make you feel?
Yeah, I love them all, of course. But as they get older, and they start developing personalities, and they start seeing that you've got a value, and they maybe can talk to you about certain things they don't necessarily talk to their parents about. I mean, you know, I give my kids advice all the time, same thing over, give them advice. And then my dad would, you know, take him out, get him something to eat or something. They come back and they say, you know, gee, Grandpa told me that I shouldn't touch the fire on the stove. And you're kind of like, well, I've told you that your whole life. Yeah, but Grandpa told me that. And so
they heard you, but they listened to him.
It's a great wisdom, isn't it? And I'm just kind of like, well, I told you the same thing. So sometimes families, you know, we'll skip a generation with advice and so forth. But they're that's a metaphor. They're a great blessing. Yeah,
Peter, thanks for coming on. It's been great to have you as always. And I'm gonna push you to come back before 2026. So be on the lookout.
See you next year.
Yeah.
Okay.
Thanks.
Thanks, Kevin.